Thanks everyone for joining our cross-country fireside chat. And I will let Chris, Sean, and Don take the floor.
All right. Well, good afternoon, everybody. Sorry for the late start here, but we're rip-roaring and ready to go. So as I typically, I get the share screen going, right, guys?
Yep.
Yeah. Okay. So as I usually kind of get into is just start off the meeting kind of just to give you sort of the temperature of the market, just to kind of get a feel for where interest rates are. This webpage, I reference this all the time when we start our meetings, is just kind of a somewhat it's a non-commercial, by clicking on here, you're not automatically, getting solicited by lenders and all this. So this is kind of true, a survey that goes out to lenders across the nation, just to kind of get a feel on interest rates. And they're putting that 30-year fix very strategically at just under 7%. So depending on the buyer quality, the loan type and all that, you're seeing the 30-year fix for a very strong buyer, or maybe a first-time home buyer special in the sixes. Some who are just, outside that A-type buyer might be just over 7%, but yeah, been kind of hanging around 7% right now. We have inflation numbers coming out tomorrow, and a few other economic PPI price, consumer price index, or PPI, a few other things, producer price index coming out this week. So definitely could be a bit of a shakeup, but just obviously keep an eye on what the Fed thinks they may or may not do, and when they may or may not do it is basically driving the market. So as you've heard me say before, everyone's talking about the Fed, the Fed, the Fed. The Fed hasn't moved interest rates in over a year now. Yet interest rates have gone from the sixes to over 8 to about 7 to middle of 7 back to the sixes. So everything moves based on speculation of not just what the Fed is doing, but everything else in the world, politics included. So obviously, the one thing that you can guarantee to expect is a bit more volatility, but just to give you kind of a feel for where we're at. For me, I think when I'm talking to a buyer about interest rates, yeah, nobody's excited about where rates are, but that shock of having rates around 7% is well behind us. Rates haven't been below 6.5% since, help me out, guys. Well, it's actually running here. I was going to say spring of last year, but I got it right here if we wanted to play around with that. But Chris or DJ, anything I should be adding to that?
I don't think so.
No, it's well over 12 months. I mean, you're in a 7% market right now.
Yep. Yeah.
And when we say 7%, you could be anywhere between 6.5 and 7.5 with cost and no cost.
Yep, we're coming up on 2 years since rates have been under 6%. So we're just running with it, and we discuss with buyers, and again, there's not much of a shock factor. I think everybody has a pretty good feel for where rates have been and everyone's a bit optimistic that we'll see a downtrend here to come, but may not be still for a little while. But just to touch on that. Cool. All right. Next one. Multifamily home purchases are definitely up nationwide. There's pockets of northeastern Ohio which you see a lot more multifamilies. Think of the Heights area, Lakewood, parts of Cleveland, and even some outside pockets. A question. I mentioned this just because this question came up twice in this weekend on different properties. But if you have a home, or I should say, let's say you have one lot with two separate homes on it, as long as those are legal, conforming to government, the county requirements and such, we consider that a two-family. So it's a unique property, but it doesn't necessarily mean it's an off-the-wall type of loan that's going to be impossible to do or require 50% down. It is treated like a two-family home, but they do want to see, when it comes time to appraise the house, they would like to see comparables similar to that. So sometimes that's where you run into a problem, just because there's not a ton of those comps. But if it's on the near west side of Cleveland, that's not uncommon to bump into those. And just a reminder, Fannie Mae, not Freddie Mac, but Fannie Mae did soften the rule last early winter of saying 5% down. So if it's a primary residence, even if it's a four-family home, you can get away with just 5% down. Obviously, we're going to look at the qualifications, the credit, the income, the debt. They are going to want to see, in addition to that 5% down, that you've got a little bit extra in reserve, whether that be in checking, savings, investments. Gift money is allowable for this as well. So this has been, I've personally done a lot of more conventional loans for family, for the multifamily this year, as opposed to a buyer having to go FHA. Remember, FHA is 3.5%. Doesn't matter if it's a 1, 2, 3, or 4 family. But prior to this rule, you had to have 15 or 25% down on a multifamily. So again, 5% conventional multifamily as long as it's primary residence.
Hey, Sean?
Yeah.
Do we have to be a first-time home buyer to do this?
We do not.
Okay. And can we use the rent from the other units to help qualify?
Absolutely. So I just did a pre-approval letter over the weekend, or actually, I take that back. I did a pre-approval for a single-family home for $250,000 middle of last week. They came across a multifamily over the weekend, and because we have rent, this is a 2-family home. The rent on the second unit was, I don't remember exactly, but we're estimating $1,600. We count 75% of that, so an extra $1,200 a month in income, and we're able to tack that on, and the buyer's pre-approval jumped up about $40,000. So you don't have to have previous landlord experience for this particular, sort of qualification, but it's a bonus. Working with another guy, we had a pre-approved for about 500, ended up buying a triplex over 600 because of that rent. So it can straight up be a game changer.
Good deal.
Yeah. Any questions on that? And by the way, for those in the audience, feel free to just unmute yourself and ask a question. I think we all know each other here, and if you just want to pop something in the chat box, Chris and DJ and myself keep an eye open for that as well. Cool. So couple of things I wanted to talk about today, just for those wondering what's on the syllabus for today or the agenda. Talk a little bit about pre-approvals, kind of, general overall, and get a bit more specific. And then I do want to talk about tax bills for Cuyahoga County, because those will be changing soon. And finally, the county came out with some valuations, and that's going to be a game changer. There's probably a more negative word than game changer for that, but there's going to be some changes on that. So just touching on a pre-approval, I want to talk about pre-approvals from 2 different perspectives. As a buyer's agent and then as a listing agent. So just to sort of classify, what Chris, Don, and myself would classify as a pre-qualification pre-approval. So a pre-qualification, let's say Maria meets somebody in an open house this weekend, and they kind of hit it off. Sounds like they might be good looking at homes. Maria's probably going to say, hey, the first step in the process is getting a pre-approval. So a good way to put that is, hey, so that what you're qualified for, and we can show a seller that you're good to start negotiating with, and to vacate the house, to give you your 30 minutes to kind of pop in. They want to make sure that buyer is qualified. And for a buyer, it's as much about it's not just saying I got a pre-approval letter. I always try and convince a buyer that it's not just about having that letter. It's about having the knowledge now to say, okay, if I'm buying a $200,000 house, I know I need this much down payment. I know I need this for closing costs. Okay, that's what the monthly payment's going to work out to be. We'll break that all down for them, so there's no surprises. As well as if there's first-time homebuyer programs, if they happen to be a first-time homebuyer, or even if they're not, there's still some other options out there for discounted interest rate, for grants. No better time than before they're putting in an offer to discuss that. We have those conversations. It's Sunday at 2:00 when an offer is being submitted, but that's a short window to get everything sort of crammed into that conversation. So anyway, backtracking. A pre-qualification is more or less a conversation. Tell us what your income is. Tell us what your assets are. Tell us where you work. Tell us, let's take a look at a credit report. And we typically start everything with a soft pull. So when a buyer says, well, I don't want someone looking at my credit, it's going to hurt it. No, it won't. We're doing a soft pull, 0 impact against your credit score. So that's a good way to kind of disarm the conversation, disarm the buyer with sort of that defense of, no credit inquiries. Well, hey, we'll do a soft pull on a pre-qualification. And that, 5, 10, 15 minute of just sort of data collection, usually by phone or with an application online, we have a very good idea of if this buyer can or cannot buy. If they can buy, we certainly can give an indication of how much ballpark that might be up to. If they can't buy, we, obviously will know that right away and can provide some pretty immediate sort of direction on what to do. Okay, you can't buy now, but you want to buy a house, before October 1st. Here's what I would do over the next 90 days, whether it's saving or budgeting, whether it's, kind of firming up employment, or of course, it might be doing some credit upgrades or credit improvements or paying down some debt. So believe me, we are more than happy to give that free advice to keep that buyer motivated and on the path to home ownership and to, working with you to purchase that home. So a pre-qualification, oftentimes no committal on anyone's part, just kicking tires and say, okay, based on what you're telling us, here's what I think we can do. Pre-approval is the next step. So at this point, if we haven't already, we'll ask for W-2s, pay stubs, bank statements, tax returns in some cases. This is where it gets a little bit more paperwork heavy. There's still no commitment on the buyer side. Of course, there's no commitment on our side necessarily up until this point, but we get enough information, we can issue a pre-approval that says, hey, we've reviewed information. Here's a pre-approval letter. You're good to go buy a house. So this is the, now Maria can start spending her gas money in her Saturday afternoon showing houses. And again, at least with the three of us, if a buyer has a pre-approval letter, not only do they have that ticket to buy, but that buyer has had conversations about monthly payments, down payments, closing costs, interest rates. We're not going to wait until they buy a house to say, oh, now do you want to know what your payment is? We're going to feed them that information just so they know what they're getting into, so to speak. Nobody wants to, fall in love with a $200,000 house, write an offer, and then find out the payment's $500 more than they were comfortable with, even if they approve for it. So these are the conversations, and those conversations are as valuable as sitting down with the realtor saying, well, how many bedrooms, how many baths do you want? Is, setting the expectation and get everything lined up so they know where they're at. Any questions on that or comments on that, guys, just yet? How we go through our pre-approval, like most lenders, is once this information is taken, we, the loan officer, submit everything electronically through we call it an automated underwriting system with Fannie Mae, Freddie Mac, FHA, VA, USDA, and the system comes back and gives us a green light. We're able to issue a pre-approval. So can we issue a pre-approval letter without having any documents in hand? Technically, yes. Reluctantly, we will do that, but when we do that, or when I do it, certainly, you're going to get detail. Hey, Maria, just so you know, the buyer's rock solid based on everything they're telling me. I don't have any W-2s. I don't have pay stubs because they haven't been able to pull those together. Here is a pre-approval letter, but it, specifically is, going to be, subject to those items being reviewed and approved. And by the way, you'd be surprised, not only with how many people, overstate or understate how much their spouse makes or significant other. You'd be shocked how many people don't know how much they make. Talk to somebody and they say, yep, I made $60,000 a year. Great. They send pay stubs. They say, hey, good news for you. I just gave you a $10,000 raise. You make $70,000 a year. Of course, it doesn't feel like it because, Uncle Sam takes a bite out of it with taxes and such. But obviously that makes a difference. And obviously things go the other way too. For someone who as a $60,000 pre-qualification, only to come back and find out they only made $54,000. Is that a lot? Well, that's $500 a month in income. That's about $250 in debt allowance. That right there, that's going to be $20,000, $25,000 in buying power. So that's why we like to be as detailed and as thorough as possible. And that pre-approval letter, when that pre-approval letter goes out, that's our reputation on the line. We realize, for you, and when you're referring, any of us or a personal partner, whether it's homeowners insurance, whether it's title, whether it's mortgage, your reputation is kind of riding on that referral. Well, same with us and same with that pre-approval letter. If we hand out a pre-approval letter and that deal blows up, first thing they're going to say was, wait, they were pre-approved and now they're not approved. What's going on? Better have some pretty special circumstances other than, well, no, the loan officer just dropped the ball. So that's why we are stingy with just handing out pre-approval letters. But I will warn you, not everybody is like that. So I'm going to kind of segue to the listing agent standpoint. But Chris and DJ, anything you wanted to add there?
I think you're very naturally getting into where I was heading next. So good transition.
Right. So I mentioned, the process and issuing a pre-approval letter. The first thing I would suggest as a buyer's agent and especially as a listing agent is when you get that pre-approval letter, this may sound silly, but read it. You might be surprised less on what it does say and more on what it doesn't say. Remember, most pre-approval letters, not all, but most pre-approval letters are kind of, put together by, our corporate office, worded a certain way from a legal standpoint to make sure everything in there is on the up and up. When you see a pre-approval letter, and I've had people forward them to me, hey, Sean, take a look at this one. This pre-approval looks a little strange. And I reply with, well, which looks strange, the first sentence or the second sentence? Because there's not much else to it. And when you see something that's probably made up on a Word doc or doesn't have a dollar amount on it or just looks a little silly, it's probably a pretty weak pre-approval. And especially if you're, certainly if you're taking around a buyer, you want to have 100% confidence in that pre-approval. But if you're a listing agent, you got 3 offers coming in on a house. I imagine, some of the realtors on this, you can sort of attest to that. You do see whose name and what lender is issuing those pre-approval, and I won't call out any lenders on this one necessarily, but there's a handful that just sort of like, yeah, this pre-approval is meaningless because it had that logo on there. I know that company, and I know their pre-approvals don't always pull through. So who is on that, who's issuing that pre-approval letter, and even more so what it says. So I just mentioned that there is a process to issuing a pre-approval letter without having documents in hand. Well, there's some lenders and some loan officers who will just issue a pre-approval letter, believe it or not just without documents or verification. They would only even, some cases, pull the full credit report or do just what they call a single in-file credit report, and forgive the expression, kind of half-assing it. But who is with a loan officer who's as DJ likes to refer to, the headset jockey, the loan officer you'll never meet face to face. They're sitting behind a computer somewhere, and they really have no skin in the game. If they issue a pre-approval letter and it blows up in their face, guess what? They just don't have to take any more phone calls. They have no allegiance to the realtor. They may not even work in the Cleveland market, so their name getting trashed and in the Pepper Pike office, for example, isn't really going to hurt them. So they don't have much to risk. Where I would certainly attest to the 3 of us have everything to risk. If a deal is pre-approved or approved and doesn't close, we've got a lot of questions to answer, and we don't want that stain on our career timeline, so to speak. So as a listing agent, when you get an offer, what I would absolutely encourage, read that letter, call the loan officer. And it doesn't matter if it's, Monday at 2:00 when hopefully they're in the office, or Sunday at 4:00 when they're at their kid's soccer game. The 3 of us know that's when sort of the rubber is meeting the road, and we have to be Johnny on the spot to make sure that that listing agent knows, nope, we got ourselves a strong buyer. So as a listing agent, I would certainly tell you to call any pre-approval that you get, the offer is considering, and just ask, have you pulled a full credit report? Okay, great. How long is it valid for? Oh, it expires in 2 weeks. Well, we're not closing for 30 days. That's going to have to be updated. Did you collect W-2s and pay stubs, bank statements? No, the buyer's working on that. Okay, well, this lender saying they can get a loan if the buyer really does work where they say they're work, really does make what they say they make, and has money in their account that they hopefully have in that account. So that becomes your reputation, as a listing agent, telling the seller, no, we're good with this offer. I already vetted it with the lender, or I know this lender, or I've never heard of this lender before. That's where your reputation is riding on that as well. And be conversational. I mean, you can ask the lender, hey, what's the buyer's credit score? They're really not supposed to answer, but doesn't mean they won't. Or if they tiptoe around that going, oh, well, don't worry, we're working on it. We're going to get it up here in the next 30 days. Okay, well, at least you know what you're in for. So ask questions, be conversational, and don't hesitate to ask questions like, hey, how long you been doing this? How long you been with ABC Mortgage? Because if they've been doing this for a year or two, and you can probably see if they're lying or look them up on LinkedIn. they've only been at a company for 60 days and they're telling you how great it is to work there. Do they really, how many loans have they closed? So these are things that, you know, may not make or break, but they could factor in. And, you know, spending 5 minutes to answer that question. And oh, by the way, if you call the lender and they don't call back, well, hey, at least you know what you're in for here for the rest of the transaction. So, so those are the few of the questions I would ask. If like it's an FHA or VA, certainly just say, hey, you know, what are your turn time on appraisals? How fast can we get things going? Point out things like, just so you know, the contract says buyer will apply within 3 days, loan commitment within 15 days. You're going to be okay with those, right? So those are all of the questions that if I'm a listing agent, I would 100% ask. So DJ, Chris, anything you guys wanted to add there? Chris, did I go right where you thought I was going to go?
Yeah, yeah. You know, my thing that I've run into recently, kind of beware the local credit union who I had a buyer basically, you know, I was asking for documents and they're like, well, I got a pre-approval from my credit union and I didn't have to give them anything. And I said, that should be an immediate red flag. You know, what's your budget look? I mean, did they get into numbers? No, I just, you know, I told them I wanted one. They printed something up and I left. You know, just double check on that stuff because there are people out there, you know, maybe the manager of that credit union is able to issue these pre-approval letters, but you know, maybe they're not making a commission, so they could care less where this goes after that. Just, you know, beware.
The other thing is, even if you get a pre-approval letter from another institution, call us and ask us about that loan officer at that company. We're going to tell you whether they're good, bad, or indifferent. Not afraid to say there's other great loan officers out there at other companies. Not afraid to say that. I'm also going to let you know if they're a piece of crap.
That happened recently where someone said, hey, I've had a problem with this particular lender, and they told me who the loan officer was. I said, hey, I worked with that guy for 8 years, a great guy. I'd say, you know, I would give him a call right now just to kind of ask the questions that I just kind of proposed, but give you a bit more confidence. Of course, they said, and if you want the buyer to call me, of course, I'd be more than happy to give him a second opinion. But, you know, in earnest, the loan officer working with does do a good job. So, I mean, we've been, between the three of us, we've got, you know, probably 60 years in this business. And we know a lot of people in this business. And my little saying in Northeastern Ohio is, be careful what you say about, you know, another lender, another loan officer, another realtor. You might be working for them in 6 months. So,
right.
How it works out. Cool. So that's kind of the stuff I wanted to talk about on the pre-approvals. Any questions out there from the gallery there? Anything in the chat box, guys? I just saw that number pop up. There we go.
I think so. Just some comments in there.
I saw it.
Scott's got the jokes. I like it.
Yeah, you know, for it to look. Yeah, okay. I enjoy it. All right, cool. I like the last rip on Don too. That's good. All right. All right. So what I wanted to chat about, I talked about multifamily here. Want to spend a minute on, so if you've heard me talking at any of these fairs, at most of the firesides, and I've been talking about it occasionally on Tuesday meetings, and any buyer that I've done a loan with for since, or refinance for that matter, since last fall, I've been saying 2024 is the year. 2024 is the year. Cuyahoga County does a reassessment every 6 years. If Eric Akbar is doing his tax class, please go to that. It's one of my favorite classes to go to. There's a big dose of reality that people get in there. We're seeing it live now. But so I think everybody's hopefully aware, but every 6 years, Cuyahoga County now, every homeowner in Cuyahoga County is getting a letter. I know some of those have gone out this week saying, hey, your house valuation was this. We're now putting it at this. You can dispute it if you want, but that's what the value is going to be based on. If you want to preview your taxes, go to this webpage, which by the way, the webpage wasn't working the other day. And you can kind of forecast what your taxes will be. But, you know, just want to let you know what's going on, and you're going to get a tax bill the week of Christmas, and there you go. Well, look at some of the valuation. This is from article from Cranes, but look at the price valuation jump on average. City of Cleveland, 49%. Shaker Heights, 36%. North Olmsted, 29%. Solon, 25%. Now, because valuation goes up 25% doesn't mean that the taxes will go up 25%, but I can assure you they will go up, and it probably won't be a small amount. Now, Geauga County had theirs last year. Geauga County put in, I don't know if it was self-imposed, but they put in a limit saying, hey, no matter how high the valuation is going to go, the tax amount can only go up X%. The state had something, a bill that was kind of in the mix saying that, you know, they'll put a cap on how much taxes could go up. I don't even know if it passed, because as you kind of you get into the fine print, it's like, oh, if you're at a certain income level or a certain valuation, there was way too much to it, to where such a small percentage of the population would actually benefit or qualify for that limit. But it's going to be a big one. And what I'm telling every buyer I'm working with now is saying, or again, have for almost the past year, is your lender, whether it's us or anybody else, if you're escrowing your taxes, we're only allowed to collect taxes based on what the bill was. So keeping it simple right now, I might be closing somebody who's, let's just keep it real simple. Let's say I'm closing on a loan. Someone's taxes are $6,000 a year based on where they are right now. That's $500 a month. And then they're going to move in and they're going to get this notice, or maybe hopefully they get the notice, because the seller may or may not share that information with the buyer, but buyer can still go to the county. Anyway, they're going to get a notification saying, yep, on this $250,000 house, they're paying $6,000 a year tax right now. And they're getting a notice saying, hey, we're bumping your value to $325,000. How much is it going to raise your taxes? Well, you can go to webpage and try and figure it out. Otherwise, we're just going to send you a bill in the end of December. Well, we're only collecting $500 a month. We're only allowed to collect $500 a month. Now, the buyer can overfund it and put extra in there, but we're not allowed to arbitrarily just pick and say, we're going to collect $600. So at some point, that tax bill is going to come out in December. We, the lender, will have, just use round numbers, share $3,000 in the escrow account to pay that bill. Well, if that bill comes back at $4,000, we, the lender, have to write a check for $4,000. So now the buyer's escrow account is underfunded by $1,000. So they're now $1,000. They owe cross country $1,000 because we covered their tax bill. So once this gets all flushed through with an escrow analysis, their payment's going to go up $83 because their taxes went up, and then they have a shortfall of at least $1,000, and it could be more than that. So their payment's going to go up $150 right there, and that's with a $1,000 bump. That's with a $2,000, so that's a 33% bump in taxes. Hopefully, it won't be that big, but I've been doing this a long time. When this happened 6 years ago, it wasn't quite as sudden, because in 2018, yeah, values had gone up, but they had kind of just recovered from, prior to the, the Great Recession, or whatever you want to call that. So this one is going to be potentially brutal for a lot of homeowners. I'll give you a quick story of how major this can be. This was last December. I had a woman, she went through a divorce, single mom, and I take that back. This was 2 years ago. I apologize. 2 years ago, she had a really high interest rate loan. We were able to get her rate considerably lower to where she was saving $250 a month. This was going to make a difference for her, $250 a month. And she was closing in December. Sorry for this being a long story, but literally as she was driving to her closing, I had to call her and said, hey, the title company just called me. We knew taxes might go up because it was, whatever the situation timing was, they went up. And I said, no kidding, $3,100 a year. So we were saving her principal and interest $250 a month. Her taxes just went up roughly $260. She was going through with this refinance, and when all the dust settled, her payment was going up $10. She still went through it, because if she didn't, her mortgage payment was going to be $500, essentially losing the $250 loss plus the $260. But she just freaked out. She didn't sign. I take that. She didn't sign papers then. She thought about it for a day or two, came back, signed papers, went through with the refinance. Guess what she did 4 months later? She sold the house. She was doing this refinance. That $250 savings was keeping her in the house, keeping her comfortable with that tax amount. she hit the panic button. Now, this was again 2 years ago, so it was a weird situation why the taxes jumped up so much. I don't really have an explanation for that without going back and digging up the file. But these things are really going to happen, and I'm dreading all the phone calls I'm going to get the first 6 months of next year that go, hey, you said I had a fixed mortgage. My payment just went up $125 or $300 or $600. And yes, I had another customer. Their payment went from $2,200 to $3,100. $2,200 to $3,100. This was a dramatic jump in valuation, and it wasn't caught, and the escrow analysis wasn't done for several months afterwards. This buyer also called her realtor saying, I want to list the house. She ended up, it is how dramatic it can be. She pulled money from her 401k to get caught up, so her payment only went up $450. But this is really what we're seeing, what we could see out there. So I just want everyone to be prepared. And yeah, when I'm telling any customer I talk to, when a customer calls me from 3 years ago going, hey, yeah, I got the mailer that you sent, appreciate sending that, just want to ask a quick question, before they're off the phone, I say, don't forget, you live in Cuyahoga County. You're going to get a letter soon, if not already, that says your valuation is going to go up. You're going to get hit with a big tax adjustment at the end of this year. Save a little money, put it on the side, $100 a month, $200 a month, because it can be brutal. So, Chris, DJ, sorry, I'm running with this, but this graph, is chilling as it can be, was kind of the thing.
Actually, it's a great graph, and quite frankly, Medina County went through this last year, I believe, last year, the year before. So it's Cuyahoga County's turn now. But I don't want to say it's going to be drastic, but people's payments are going to go up.
And it's not just the taxes going up; it's a shortfall too, and so it's kind of like a double.
Which you can pay the shortfall.
Yeah. Yep.
You can pay the shortfall and just have the increase in your payment on the taxes accordingly.
Mm-hmm. And realtors out there, anybody want to chime in? Anybody seeing any? Anybody getting a temperature, a feel for like if the general public knows this is coming? Because again, I've been sort of screaming from the mountaintops, but didn't know if anybody had kind of, if they see this as an impediment for certain buyers here moving forward, or, I mean, like I said, homeowners, unfortunately, it could, change people's position. Yep, Alex just said she got someone in the mail today. So I would say if you own a home in Cuyahoga County, you'll get something soon. It sounds like this week. And you know what? I didn't check on the county webpage, but you could probably.
Yeah, they haven't updated. I just looked at my property; it hasn't updated yet.
Yeah, me too. Yeah,
but I'll tell you what. From the time I bought my place in 2018 to 2023, I've had increase in values on tax values now of only 20,000 over a 5-year period. Mm-hmm. And I don't think the taxes have increased greatly during that time. So it's not a dollar. It's not a $60,000 increase in value and a $4,000 increase in property taxes. There's a percentage because was it House Bill 910, I think, or something like that.
Mm-hmm. Yeah, and I would say we probably got off, I don't want to say scot-free, but over the past 15 years, a lot of people are getting their valuations lowered, if not automatically by the county, with a relatively simple process. Now, disputing this is a challenge. You may have to pay for an appraisal, and we have appraisers on our that certainly we know that we can connect you with if needed. But be aware.
It's a good touch for realtors, Sean.
What's that?
It's a good touch for the realtors.
There you go. Yeah, 100%. Yeah, we ourselves are going to be probably doing we keep in touch with our customers, obviously, several different ways, but I absolutely, if I'm a realtor, I would put some sort of, anyone in Cuyahoga County who's, as a homeowner, even if they're not a previous client, it's a good reason to reach out to somebody, family, friends, etc., let them know this is coming. So, yeah. So I think, yeah, this article, I imagine Bernie's article in Cleveland Magazine, and then this one in Cranes, I think are probably going to get the two most run for a while. I didn't check the Plain Dealer to see what they had on it, but I'm sure something's coming there as well. They've had some few things leading up to this, just sort of shot across the bow for the general public, but yeah. Cool. So any thoughts or comments or questions on that? Okay. So other than that, I think let me just see what the other ones I had here. Just another stat here. This was for those of you who follow me on Facebook. Every day we have something that kind of comes to our corporate with just kind of an FYI or some statistics. Feel free to kind of repost that if you want, copy and paste it, or literally just steal the content and claim it as your own. 100% fine for us. Yeah, we love a tag, but just a couple of statistics in here. 79% of the purchases. This is kind of closes the books on 2023, but 79% of the purchases were single family homes. That's even more than, like, the condos is only 8%, which I was surprised to hear that. Less than one in 10 purchases are not condos. It always felt like it was a little bit more than that. I definitely see a higher demand for condos than years past, probably because with a lot of people sort of downsizing. And a lot of those tend to be cash purchases. You take somebody who's an empty nester, maybe, they're selling their 2-story upstairs master, and they're 65, 75 years old when you get to 1-story living. But so a lot of those are condos, but yep.
How old did you say?
75.
Okay.
Yeah. I don't think this one's being recorded, but yeah. But believe me, my wife and I are, my wife is a big long-term planner. We still have kids, 13, 11 years old, but Reno in 5 years and 6 years, my wife's got a plan in place. So maybe she'll do one of these seminars for us. There's another statistic in here. Forgive me, I can't find it at the moment, but maybe it was on this one. No. Anyway, I think it was roughly 20% of first-time home buyers are getting gift assistance for down payment from family, not friends, from family. Grants are in addition to that. So I'll just kind of close out here just with a reminder of first-time home buyers are in a great position. So, well, they're not getting $15,000 handed to them through their tax refund like they were roughly 15 years ago, but this is kind of the next best thing. We've got grants. If you make below $76,000, we got one grant. If you got under $94,000 first-time home buyer, you get a slight discount on your interest rate, or could be more than slight. We have the OFA grant program, which is 5% down. Yeah, there's some strings attached on that one. The community promise has been an absolute home run. We're a buyer I have a buyer right now, a couple. He's selling a house. She's never bought a house before, so they're buying a home together. She's a first-time home buyer. They're moving from South Euclid to, I think, University Heights, or maybe it's vice versa. Regardless, because she's a first-time home buyer, we're giving them $6,500 towards their down payments. We're giving them towards the closing, I should say, $500 towards their appraisal, and we're paying for a home warranty for them. Now, these guys were going to be putting between 15 to 20% down anyway. So what they did is they took most of that $6,500 and used it to buy points. They're getting a 5.99% interest rate on a 20-year fixed, and they still have money left over from that grant to cover other costs and down payment. So we will look under every rock for any program that would benefit a buyer. Chris, Don, myself, yes, we are commissioned, but doesn't matter if the buyer is getting a grant or a fixed rate or a 15-year rate or an adjustable rate. We get paid the same. We just want a happy customer in the end who gets, a good quality loan when all is said and done. And like I said, we'll come up with any option, or I should say, strategize any way possible to try and maximize the benefit that a buyer has. And being a first-time home buyer has a little bit of a one step up on some of the competition. So that's all I had today. Don, Chris, anything you guys wanted to add or any questions out there?
No, solid.
Okay.
John,
Athena,
do you have a products sheet? Athena's asking for it.
Yeah.
In the chat.
Yeah. You know what? Let me just see which one to go with. Let me just put a few things in here. So we'll keep the Zoom open for a minute, but a few programs that we have. Well, here, let me put a few things in here. So this one is our buy now, refinance later. Oh, you know what? This probably has the wrong date on it, but anyone who closes with us between now and the end of September, if they come back and refinance in 2025, we waive our lending fee. So that's one I just threw in there. Community Promise. This is the $6,500 grant plus the appraisal rebate, and then plus the home warranty. So I'll put both of those in there. The Smart Starts. Smart Start flyer is this is the one where if you make is roughly $76,000. It depends on where the property.
77.2, Sean.
77.2. Thank you. And that does make a difference. I've had people miss out on this program by $15. It's heartbreaking. Sometimes we can cheat a little bit, get rid of the overtime. And when I say cheating, we're not bending any rules. We're just, reducing the qualifying income, and that can be done. And then I do have, so those are sort of the promos that we've been seeing a lot of. And then here's my loan comparison. Just make sure this is the right one before I load it. Yeah, this one might be slightly outdated. Well, the picture of me is outdated in all of these, but this one just does a little comparison between FHA, VA, conventional. So not really loan specials, but more just the difference between the main header type loans, conventional, FHA, VA, USDA. So it's a good one. With these flyers that I just uploaded, just know that obviously the three of us can send anything out there, but these can be branded. So if you look on the flyer here, see this big white space here, we can get you added to our Total Expert marketing system. It's free. We basically just send you an invite for those of you who haven't done this, and then you upload your picture, your license information, address, phone number, all that stuff, and then that's all in there. And it takes Chris about 10 seconds to put together. It takes Don and I about 10 minutes to put together, but we can do it almost that quick and get you some of these branded, both with our information on the left and your information on the right. So just know that that is 100% an option. Actually, let me just. Yeah, there you go. So this is the $6,500 one, but just so you have an idea what those look like. So, yep. So that being, leaving it there, does anybody have any other questions or concerns? And Athena, if you don't have a chance, or if those are too difficult to download, just shoot us a quick text or email, and I can reply those. For some reason, they're like 7 megabyte files, so I might have to send them to you individually. But and again, to be co-branded, just give us a heads up. We'll send the invite out and get that moving. Cool. All right. Any parting shot, guys?
All good.
Great stuff.
All right, cool. All right, good. Thanks for everyone for joining us, and hopefully, yeah, we'll be here if you need anything else. And have a great day.